Thank you, ma'am. I appreciate that. So, going over today, uh, how to mark up charts more efficiently with Ichimoku, and this you could do this on any time frame really. I'm going to start off with the daily chart, and I'll show you guys on smaller time frames as well. And to see if you really want to take an opportunity or not on trading any time frame. But the first thing you want to identify when you're looking at the chart with Ichimoku, you want to see the trend of the market. So that's one of the first things you want to do. So right here, if we zoom out pretty far, you see that it's a clear uptrend. It's not really like a super strong one. It's just it is trending up. If we take Ichimoku off, we could put a trend line here. We know prices going higher, making higher lows. So we see that. But let's go ahead and put it on just for this sake. So if you want to look, for at least a year or so of information. So between here and here, we got at least almost a year of information here and even here. So let's see, this is September of last year, August of last year. Okay, great. So we still haven't even reached this level. All right. So market is technically saying it's bearish in this indicate and from here to here, only because we haven't reached back to the high of here. All right. But we see that the market is trying to make its way back up to this level. All right. Not saying it's going to get to that point. I'm just saying, we're just observation right now. All right. So when we're looking at this chart, we see we're we're in an uptrend to the upside towards the alt that high of August September area right in here. So we're looking to see if market could reach that potentially. All right. So the first thing I want to look at, we are already identified the trend. We're obviously trending up. We're above the cloud. We have a bullish Kumo, so we're up. The next thing I want to identify is what is the Kijun and the Tinkinson doing? Do we have a bullish TK crossover? Do we have a bearish TK crossover? That's the next thing I want to really identify here. So right here, we had a bearish crossover, but now we have a bullish crossover, and price is still above the clouds. So that's a good sign. So we do have a problem here with Chiku Span. Chiku Span is still underneath the price right here, and it's underneath the Tinkinson. So you don't want to look for a trading opportunity here. So if it starts conflicting with Ichimoku rules, this means that there's no trading opportunity on that time frame. So we did have to do too much marking up here. So we're gonna go to the 4-hour chart now. All right. So we look at the 4-hour chart. We notice something that we don't really like here, and automatically you could tell that this market is starting to flatten out and starting to range. How Chiku Span is stuck in, a little stuck in price here. It's a little bit overpriced, but realistically, it's pretty stuck. We do have a flat cloud here that's bearish, which is not saying that it's not in a trending market because it's not really underneath price. Like right here, it's underneath price, but it's not really underneath the cloud like we want it to. And it's not even underneath the Kijun or the Tinkerson right here. So this right here is letting us know that the market's ranging. So what we could do, we could zoom out and really identify where it's ranging between. So if we look back, we could take this off real quick and really gauge where the market's ranging between. So if we look, we're gauging the market right here, and we're also ranging about right in here. So if you notice, this is the market's range. So now we have an area to play in right now. All right. So this is our playground between here and here. All right. So once we identified our playground of where we want to trade in the market, we want to say, okay, now do we want to go bullish or bearish? And we still don't have really a confirmation on what direction we want to trade in because the 4-hour time frame is flat. So let's go down one more time frame. We're just identifying and letting us know that the market It's not in it. It's not tradable on the daily, and it's not tradable on the 4 hour. So now we go to the one. No, I went down too far. The 15, the hour time frame. So let's look at the hour time frame. So here's where we're looking at the market for a potential trade now. Now we do have a potential trade setup. So when we look at this market for trading for just this strategy, we're looking for a key June bounce. That's the level that we're at. We have a level signal. We don't have the trigger yet because this candle has to close. It closes in 30 minutes. But we have a level and we have a potential signal. Once this candle closes, this is going to show that we have a we have a potential tweezer bottom in this area. So then we'll have our signal there. So once we get that signal, our trigger is going to be putting a entry potentially right there. Depending on how this candle closes, you want to wait for it to close first. So we do have some type of confirmation for a potential trade. So our strategy would be the key June bounce here. We got a bullish TK crossover. Price is at the key June and above the cloud. T expense free. So we're looking for a bullish trade to the upside here. That's how we look for trading opportunities, breaking it down piece by piece and knowing when to avoid a time frame, knowing when not to. Just because you don't have a trade on the daily time frame does not mean you might not have a trade on a smaller time frame. It's just going down and breaking the charts down piece by piece. So now we have a potential opportunity. So we know at the support and resistance level is actually 50-50. So this is what we're going to look for. We're going to look for a bounce or a break here. Key June bounce to the upside or a key June break to the downside. And if it breaks to the downside, it's probably going to be a move to down to this fractal. And that's where we look to potentially take another trade. Actually, it's actually going to be this fractal. We'll look for a potential trade here, or we'll look for the market to continue and break even further down. If it does get down to this level, since this cloud is going to act as a support area, because that's a lot of support in this area, what we will look for is something like this, a move down and a potential move to the upside, which would result in an S wave at the end of the day. So this would be our S wave here to the upside. So that's what we would look for potentially in that area. All right. If it does fall down to here. So we have some options here. Wait for the bounce here, which looks like it's going to bounce here and go up, or we'll continue to move lower into this region or wherever the market decides to take it prices to. So overall, this market is bullish, but we're just trying to identify where it's going to go. And if you look at the weekly time frame, the stronger the higher the time frame, that's the time frame that you want to abide by overall. And it looks like the market is still trying to push higher here to the upside as well on the weekly time frame. So this is what you want to look for in the market. I hope this made sense to y'all. Did this make sense at all? If it didn't make sense, let me know. I do want y'all to ask questions. But this is definitely something that you want to pay attention to when it comes to uh, looking at Ichimoku with multiple time frames or looking for a potential trade setup. If you can't find one on another time frame, look for it on another time frame. And if you don't get one at all, then you just don't have a trade for that day. All right. But did this make sense?
Yeah, I hear you.
Awesome. How about you, Paul? Did it make sense?
Sorry, I'm distracted. But yeah, I was yeah, I think I'm following along.
Got you. Got you. Okay, cool. Um, well, good thing I'm recording it for you, so you could go back over it. But from what you gathered, Greg, what was your personal bias on GBP NZD?
Um, those two scenarios we looked at, I kind of
Right.
feel like it might do the second one most likely.
Oh, okay, here.
Kind of like dip into the cloud a little bit, then
Right.
go back up.
Right.
Um, yeah, I feel like it's gonna be more like that over the rest of the day. I mean, we're on Thursday now, so
Right.
I feel like the move upward is going to take a couple days
Right.
at least. Well, it looks like there's like a potential 150 pip move, give or take.
Right.
Um, but no, I'm totally with that analysis. That's pretty much where I'm standing. Also,
Okay. Yeah, and going back to the fractal, this is really the fractal that market came back down to. Like, okay, so once here, let's see. So we broke that fractal. We did break this one too, but market's really not going to come down. This is generally the area that we're looking in, but it could wick to here and then do that. But I still think it's going to be bullish. But when we look at this, it was a fractal breakout here, right there, kind of retested here, kind of, but not really. This was just to hold this level because it was really just holding here. It wasn't like a real retest. So we could get our real retest from this impulsive move, retest, find our trade here or slightly lower, and then look to go higher there. And then we have our S wave trade right there, which is where you really want to trade the market anyway, around this area. If you could get a S wave trade, most likely you're going to catch something like this to the upside. And even if it doesn't do that, you could still catch this move here to here. So you have a pretty good range on where the market could potentially go, especially if this stays a bullish cloud. Oh yeah, this is gonna be a strong move to the upside. So it's just gonna be a waiting game. Personally, I'm bullish here. You could still get in the trade a little bit early, but based off the strategy, your entry would be here, just in case the market does move earlier than anticipated, because we never know if there's news in the market. Is there any news for GBP NZD pairs on the currency?
well, I have no idea. I
Because
don't even look at it.
that's one thing to take into consideration too. Is when do these pairs move, and also the news in behind the GBP and also behind the New Zealand dollar. So that's also something to take into consideration. Now, let's say we do get an early trade scenario and it does end up going bullish from here. So we could get the key June bounce strategy from this point. Now, if it does come down and hits our stop loss, that's fine. We'll just look for another opportunity around this area. And that's how you trade. Like, you won't win all your trades. You're just getting an idea where the market's trying to go so you can set up for another move. Just because your plan failed the first time, you can wait for the next setup and trade your next setup. That's all trading is. It's trading your strategy and your setup, and trying to increase the probability of that trade going in your favor. So this is how I'm looking at it right now. I do think it's overall still bullish. So I would look for nothing but bullish opportunity. Like, even if it goes down, I would still look for bullish opportunities. All right. Let's go to another pair. Let's see. Let's go GBP US dollar. All right. So let's say we were looking at this time frame. Let's say our main time frames were the hour and the 15-minute time frame. All right. So for this particular move here, we see that the move is very bullish. We had actually a Tinkerson breakout right here, so we could actually got in right there. And that's not a lot of pips, but it's still at least probably about five. About five right there, which you could scalp that and still make some quick profit. Because if you are a scalper, if you put in a standard lot uh and you caught 5 pips, or 5 or 10 pips, that's still pretty good day for you. Pretty good day for you. And you know, a lot of the times, most people try to catch a little bit of pips anyway and get out of the market. Forex market is not really designed to uh, for long term trade unless you got the capital for it anyway. But going back to what I was saying, this is if you're gonna use the like trade on the hour time frame, you want to recognize your support levels, your resistance levels. So we zoom out. Let's see some areas of support. We definitely had some support here. We draw the line back here and a line here. We had a support zone at this point down in here and over here. So price barely only tested this level pretty much twice, actually three times, one, two, and three back over here. So it literally tested three times. So we know that this is an area where price will respond. And it looks like every time price gets in this area, it's always bullish. So you're thinking bullish in this area here, all right? So we do see that market did range a little bit. I'm pretty sure there could have been some divergence here. I would have to check. Let me make sure. Could have been. Let me see. Let's go back to right in here. So yeah, there was actually some divergence here, some bullish divergence. So, okay, so I don't know if y'all trade divergence. If you're gonna trade divergence at all, trade divergence at strong levels of support and resistance, or levels that haven't truly been tested yet. Right here, we did have some, like I said, we did have some divergence. What happened was the market was ranging flat. And let me take Ichimoku off so y'all can see this clearly. The price was flat. And what I mean by flat, it was consolidating. So if you ever see prices consolidating while the ultimate oscillator or whatever indicator you use to check for divergence, if you see that it's flat and then you see the indicator or oscillator that you're using is trending up, then that's more likely than looking for a bullish breakout. So what you would do, you could wait for that fractal breakout, or you could set your buy stop at that price level and let the market trigger you in that way and take advantage of it. Because most likely you're not going to catch it if you're looking for momentum, but that's fine either way. So you see that there was divergence, and we had that breakout there. So you could either cut the fractal breakout or cut the trade at this point. So either way, you're going to get in the trade somehow. You just need to figure out what's going to be best for you. But looking here with Ichimoku, so let's say this is where we're looking for our trade. So let's mark this on the 15. Let's go back a little bit. How could we have taken this trade? So we know this is support. That's fine, cool. So now we're going to go to the 15-minute chart. And we see that the market is ranging here. All right. So where would you guys have looked for a trade opportunity? Because this could have actually been, in our minds, this could have been a short, but let's go back to that hour time frame. Let me put these on the 15-minute real quick, just so I could, realize what's really going on here. Okay, so if we look at here at the 15 again, we know this was the area that we marked up as a level of strong support for this market. So what we're seeing here, we're going to look for we really want to break out outside of this Kumo here, but this is looking bearish for us, so we don't want to take this just yet on the 15-minute time frame, because this is saying no, this is going to go down. But let's see. So it did go down and it made price action here. So now that we have price action here, let's take this off. All right, so would y'all take this trade in this trade right here? Yes, no?
I'm not super confident in it.
Okay, why not?
We still haven't formed another fractal on the way down for one.
Okay.
I think it needs to touch the bottom as well. For me, I think that's
Right.
about it.
Okay. I'll take that. So you could trade this, and the reason why is only because if you're trading just like you have to understand when it comes to trading, there's so many styles. But if you're trading just pure price action, you could take this trade here because you have a level and you have a level of support and you have a hammer candlestick. So that's enough confirmation to take this trade for just a pure price action trader. All right. And you know that you have support down here. So you can put your stop loss, probably in the middle of this zone here and entry right above that hammer candlestick. If you were trading just pure Ichimoku, you would have probably missed this trade. So that's why you have to, figure out what you want to trade, what style you want to trade here. All right. So let's put our entry slightly above there, give it some room, and let's see. So we have that. Next candle triggered us in. Next candle's still slightly underneath our entry. Still, and then now we're in profit there at that point. And we're still in profit, still good. So now let's look at it with Ichimoku now. Now, something interesting happened here. All right. So one thing we could potentially take this trade actually, let's see, let me rewind it a little bit. Probably, nope, not there. Nope, not there either. Right there. So right here is where we could have looked for taking a trade. Now, why would we take a potential trade here? I know it doesn't look like you could take a trade here, but looking at it with just Ichimoku rules, you could potentially take this trade here. Now, if y'all don't understand why, I'll just point it out. So we had a bullish TK crossover. This candlestick right here was the one that we had our bullish TK crossover on. Price is also above the cloud, and Chiku Span is also free right there. So you can potentially take this trade here. Is it going to be a winner? We don't know. But just in case, what we're going to do, we're going to put it about 5 pips above this area, this close of the candle. So about right there. So this is going to be our entry about right here. All right. So if you don't want to put it right above the wick, put it about 5 pips above. Just to breathe a little bit. So it did trigger us in, so that's good. So now we're triggered in, and now we got signs that this market's about to go bullish now. We have Tinkinson and Kijun both angled up. We're starting to form a bullish cloud now, and Chiku Span is free above price. So now we're expecting this market to do this now. We already know we have support down in here, so we don't want to go trade against support. This is a strong level of support. And then also we identified on the 1 hour time frame, we had bullish divergence. So now that we have bullish divergence, a strong support of support, a strong support of support, a strong area of support, and then we have Ichimoku breakout right here where it said to buy in right there off that candle. So, and we put it up 5 pips ahead. So we're going to take that trade. Let's see what happens. And we are good. So right there, we are good. So you would go back to the hour time frame, gauge what the market's doing now. So we're trading right into resistance now, but price and the market just got bullish on the 1 hour time frame now. So this is good. Chiku Span's above the Kijun. We just had a breakout, and we're good. So now the question is, are we going to get a pullback to the breakout? This is where we would expect a pullback. Are we going to get this and go up? Or are we just going to go straight through and make an I wave? So we don't know what the market's going to do. But when you have divergence, that's a lot of momentum, and usually the market wants to go straight up. I'm not saying that's always the case, but that's usually what happens when you have divergence. Let's see. And we're still going up. So we ranged out a little bit. We might actually come back to Kijun here. Let's see. Nope, market just decided to go up higher. So you could tell that the market wasn't going to go any lower. Once it made, let's go back. Let me show you something. So let's pay attention to what happened right here. And watch it form its fractal. All right. When this happened, pay attention to these fractals. When it formed a fractal right here, this said we now have support right there. That's all that said. So now we look at our strategy. Oh, we could actually probably buy here because we have a Tinkinson break right there above the cloud. Even though the Kijun is flat, that's fine. What we're going to do, we're looking for the break. We had a Tinkinson break. Let's put it 5 pips above. So let me do that. Well, that's a little too much. I will just put it right there for, yeah, perfect right there. So we'll put our entry right there. All right, so that's our entry. So now we're gonna put our entry here. We have a Tinkinson breakout. We had our bullish TK crossover. Price Chiku span is above the price. All it needs to do is get above the cloud, and we're really gonna be selling. So really, we could aim at this flat area for our target right here. So blue will be target. And another target area would be probably right here. So really we could zone this area. And we're looking to shoot for about, this is our entry. So from here, it'll be 30 pips to the high point, it'll be 42 pips there. So let's play it. So now we're triggered. Still holding above the Tinkinson, that's fine. We're good. Now we got both the Tinkinson Kijun, the Kijun and Tinkinson span A and B both pointing up. So we're looking at this area to look for taking profit. It's a strong candle there. So we hit our target and you see what happened. We had a shooting star candlestick. So you could take your profit here if you want to, or you could, let's say you move your stop loss, slightly right there, or let's say you move your stop loss to right here now, about right there. So you could do that just in case, you won't get out with a lot of pips here, but that's fine. You still managed to squeak out 18. So let's see. Well, and then look what happened. Knocked us out. But look, market keeps going up and it broke higher. So you could play with this however you want. You could have taken all your profit at that candle. Like right when that candle closed, you could have taken all your profit. But what you're really doing now, you're trading the momentum off the divergence. Because remember we traded divergence here. Boom. Got that divergence. And notice that we had an N wave here. And we're looking, actually, let me just do this. So it would have hit our first target there. Let's see if it gets up to the 1-to-1. Okay, it looks like this is the current market now. Or is it? Okay, I guess this is not. So yeah, this is now the current market. So now we're looking to see if price is going to reach here. Looks like it's holding above this price is holding above the Tinkinson pretty well. So it looks like we're gonna aim here next if price doesn't fall through back underneath here. So any questions so far?
That looks really good.
Awesome. Did it make sense at all? Like everything was clear cut?
Yeah, definitely.
Awesome. All right, so let's go. Let's take a look at gold. See what we see there. Let me go to that daily chart because that's where I was really looking. So gold has been funky. I know y'all. I don't know if y'all been looking at gold, but we said gold was gonna be shorted here, and I don't understand these candles because look at how these bearish candles formed here. This one doesn't make any sense. This one, okay, makes a little bit of sense, but not really. And this makes sense, but these three here, I don't understand what's going on with these candles. Don't make no sense. But anyway, let me go ahead and look at gold. I do think gold is trying to get bullish again. It's trying very hard to get bullish again. Overall, the market for gold, let me see. It is stuck in this P wave on the monthly time frame, which is huge. And this market is definitely bullish on the monthly time frame. Price, let me see. For this to really take off, I want to see price close above the Tinkinson this month. Because if it doesn't close above the Tinkinson this month, we're probably going to range out sideways this way. And I don't want to see that. But you never know. But I do think right here, this is where price would need to be above to start getting bullish for good. Let's see, breaking it down to the weekly. I do have it. I do have this formation on the weekly. I don't. This is just a theory. It's not saying that this is concrete, but it's just a theory that gold can fall. Just based off the weekly chart, we have this descending triangle. So I keep this theory just in case. I do want to actually see what level this is right here. So just come back to it and keep this on the daily and the monthly chart. Let me see what this level is on the monthly first. So on the monthly chart, this would be the key June. So that actually would be interesting if it got back down to key June. And if it did break this P wave here, I'd be cautious to see if it retested this level and start coming down this way to this level, or at least the cloud too. So that's something that's to pay attention to long term. Bullish scenario is just if it closes above here, and we'll look for buys next month to the upside. But it's hard to call this early. But it's hard to say because right now, if you look at the weekly chart is showing a little bit of weakness, only because of this formation. And you see the market's making lower highs, which is scary, and this is flat too. So this descending triangle here is something to take note of. I do also think if it does manage to hold here, and you do see a potential in wave to the downside right here on gold. Let me see, bam, bam, and that'll give us straight to our real target, that bottom here at that 1-to-1 level, making that in wave here. And then if it does decide to break out, it's around that area that we were looking at in the first place. So there's a lot that could be said about this market for gold. I would just be very cautious here. A lot could happen. The time frame that you would want to trade this would be the daily. And the thing that you would want to focus on and pay attention to is how price is going to respond here, because we do have a bearish crossover right here. Oh no, this is a bullish crossover right here. And market just got back into equilibrium just here in this area. But the sad thing about it is we have a bearish cloud. What needs to happen for price to get bullish, like a strong bullish market, cheaper span needs to get above price, and it needs to break here, and price needs to break the Kumo right here to get like a strong indication of a bullish market. So We don't have that yet. I would look for price if you want to go bullish. Look for price to come back above the Tinkinson here, and you might want to trade on these smaller time frames to get in an earlier position. Otherwise, if that's not the case, you're gonna have price fall back down into this zone and make a V wave, and that would be here. That's the ugliest V wave I've ever seen, but it's something like that. Something like that. So that's just something to take note of. And if you want to take it further, you can come down to the 4 hour time frame and it looks bearish or potentially bearish because what's happening here, you had a bearish TK crossover, you had the breakout, you had the breakout retest happening right here at the Kijun. So you're looking for either a Kijun breakout or a Kijun bounce right here. So prices go either going to break the Kijun to the upside or bounce to the downside. We don't have price action yet. We still got 2 hours for this candle to close. So really you might be waiting for uh 6 hours for confirmation to see how that next 4 hour candle is going to close. So you don't need to look for no trade here yet. And then also Chiku spends underneath price, which is a very strong sign that mark. It's underneath the Kijun and Tinkinson. And then also the Kumo A span A is angled down, B is flat. So we're looking for our trade. We actually, you really should look for your trade here on the 4 hour, right at this level, and see what happens here. Because if we could break above the Tinkinson here, the Kijun here, I mean, we could probably see Chiku Spence start to slip through price and start to move up. Now, what we don't want to see is Chiku Spence do this. We don't want that. If that happens, the market's got to end up ranging between here and here. Actually, let me highlight that. It's got to range in between here and here. And most likely here and here. That's what the market would probably end up doing if this ends up ranging. So this is something to be mindful about. I'm not going to jump to conclusions for this. I'm just going to trade the strategies. That's how you're supposed to trade anyway. Trade your strategy, not what the market looks like. If the strategy fails, that's fine. You don't. That's why you use good risk management. Don't take a big loss. Get back and find another good quality trade. And if you find a quality trade, it overshadows your loss anyway. So you could take 10 losses out of 12 and still be a profitable trader if your losses are not, massive compared to your wins. 2 wins could change your whole, trading game. And, people argue about this is say that's not true, but it is true. If you could literally have 12 trades, lose 10 of them, and still be successful for that trading week if your losses are like pretty much minimal. You just have to make sure that your wins are much cleaner than your losses and that you're looking for quality trades versus quantity amount of trades. I learned if you want to really be successful in trading, you have to look for quality trades and don't just jump on everything that looks good. Just be patient, wait for the move, and you'll find the move when it happens. So, that being said, uh, if that made sense to y'all, I am gonna stop recording this so y'all could, give me feedback on what y'all think.